Hey, welcome everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, it's Barry Saywitz. Hey, Barry.
Hey, good morning, Paul, and good morning to all of our viewers and our listeners out there. It is Tuesday once again, and we are back talking more real estate. I'm Barry Saywitz, president of the Saywitz Company and managing partner of Saywitz Properties. And it's if there's one thing that I've learned, I don't know, maybe there's two or three things I've learned, but if there's definitely one thing that I've learned in all of my years of doing this, it's to try and learn something new each day, try and apply that to what you're doing in life, make good business decisions, make smart decisions, surround yourself with good people that can help give you good advice, and that's what we're going to try and do today. So we've got an interesting format of the show today. We thought we'd mix it up a little bit. For those of you who can see me on the video, I have shed my suit jacket. I have rolled up my sleeves. We are going to dig in. I thought I'd dress.
I thought you did it for me because that's the way I dress normally.
I was trying to dress down for you, Paul.
Yeah, exactly.
I've got a couple more stairs down to go. But I'm excited about today's show. Today we are going to talk about credit.
Yes.
Why you need good credit personally, what that means, how that relates into business credit, and then how that gets back into what that applies to in life, whether that is buying a car, leasing a car, buying a house, buying a piece of property, and why.
Or renting an apartment like millions of people do from you.
Yeah, or any of that, and why you need good credit. And if you don't have good credit, maybe we'll give you some tips on how to fix it.
You told me before we started the show that you used to teach a class on this at Irvine Valley College. Talk about that, because I don't know anywhere to go to hear this kind of stuff.
Yeah, I did, and it was a ways ago, but it was for college freshmen, and it was on why you need good credit and what is credit and what that means. And I think the average high school student or college student doesn't have a clue what that means, and when you start to go through life and you start to apply for credit, in many instances your parents have to guarantee whether it's an apartment loan or a car loan or other things to get you going, and my father had to do that for me. But as I started to get into business on my own, I started to read up on ways to be able to build your credit and to be able to get a bank to want to do business with you or make you a loan or do whatever you needed to do. And so there are many things in life, and in today's world, it is more prevalent, I think, than it was before, because it's very difficult to get credit.
And yet we're here at the University of California, Irvine's Applied Innovation Center, right next to campus, UCI. I'm told that today they flood these kids with credit card things.
Look, well, I went to UCLA, and I remember walking on the Bruin Walk from, where the dorms were to where the classes were, and I would get no less than 4 or 5 applications for credit cards, from Discover to Capital One to you name it.
And it's free money. You think, okay, well,
and that's what they're banking on, right? So the credit card company is banking on the fact that I give you a credit card with a $500 credit limit, and the first thing you do is go to the store and buy stuff and run up the credit limit to $500. And then when your bill comes, the bill says your minimum payment is $20.
Right.
And so you pay $20 and think this was a heck of a deal.
I got $500 worth of stuff. Yeah.
That's right. And all I do is I pay the $20. What they fail to teach you, or that you might be missing, is that there's interest on that money. Yeah. And in today's world, that interest could be 25 or 30%.
And what shocked me is when my daughter had this happen to her, and she got a credit card, and she didn't realize that when she ran it up to $500, now as long as she made the payment, they gave her $1,000.
Yes,
you were good,
because they'll keep increasing it, and then you go back to the well. And so my $20 payment was $40, but I got $500 more stuff.
Yeah, right.
This is the greatest thing ever, and I don't have to call my parents and ask them for money because I'm just getting free money.
Yeah, exactly. And then all of a sudden, until you can't pay, and then you got a black mark on your thing. Same thing with student loans and student debt and everything. I think students are walking out with more debt than I can imagine these days, not just because of bad credit card practices, but because of the cost of school and what they're doing here. So then they start off life with bad credit.
Well, and then all it takes, if you have no credit, all it takes is one thing of bad credit to give you horribly bad credit, right? It's one thing if you have 10 different things on your credit report, and then one of them is bad and 9 are good. The 9 good, it's like a Yelp review, right? The 9 good will outweigh the 1 bad.
Right.
but if you only have one thing on your credit and it's bad, your score might be horrible, and you might be, like an F in terms of grading it like a class,
So-
A through F.
So we had somebody in here. We do a show for the Small Business Development Centers, funded by the SBA to help businesses grow and get started and all these things. And they brought in somebody from Experian, the big credit agency that's based here in Orange County. One of the three, right? There's TransUnion, Experian, and who's the other one?
Equifax.
Equifax, okay. And they track everybody's credit. I don't know why there's three of them, and I've never understood why.
It's a three bureau, and then it melds into what is called the FICO score, which is the combination of the three bureaus. And so, if we're going to dummy it down for a second, right? We could talk about this all day, and in fact, this was an entire semester's of
Okay, we're going to
cram it into 28 minutes, right? But there are three credit bureaus. There's Experian, there is Equifax, and there is TransUnion, and each of those tracks your credit, and not all of them are the same, and not all of them.
How do they track your credit? So everybody who you buy something, or the credit card companies, the people who issue the credit cards,
anybody that lent you money from a commercial perspective. So whether that is a car loan, whether that is a car lease, those people report to the credit agencies that they have lent you money, and then they report on a monthly basis if you've paid your bill on time.
Right.
And so if it's a credit card that you got, if it's a gas card, if it's a jewelry store that gave you their credit card, if you went to Macy's and got one of their credit cards.
It has to be a card. So it wouldn't be you as a property owner with apartments.
Well, hang on. Okay. So there are credit cards that get reported. Then there are loans. So a car loan, a home loan, a property loan that you've personally guaranteed or signed personally for will all show up on your personal credit report. And so as a property owner, I have loans that I signed early on that I signed personally in my own name as opposed to a business name, and those loans still stay on my personal credit report and show up. And so every month when you make your payment, the lender or the credit card company or the car company, whoever it is, they report back to these three different agencies that you paid on time. And if you pay late, they report it. And so the credit reporting agency will keep track of your payment history. Except that not all three credit reporting agencies are exactly the same, and the reports are not all exactly the same.
That's what I never understood. Yeah, right.
Because the information comes from the person who lent you the credit, right? So, or the loan.
And did they report to all three?
It depends. So well, I don't know, pick it. If Bank of America, if I got a credit card from them, they typically would report to all three credit reporting agencies. If I got a credit card from, I don't know, pick another one, Discover, they might only report to Experian and Equifax, therefore it might not show up on my TransUnion report. So if I only run one report, I cannot be satisfied that I have an accurate reflection of what someone else might see. Now, there is a three-bureau report, which then goes into what they call a FICO score, which is your sort of melded overall score and your report. So they take all the information from all three credit reporting agencies, and they basically combine it into one report. And so you'd think that that would be the comprehensive report.
Right.
And then FICO is an industry term that has come about, which is basically they have a credit score rating which goes from, I think, a low of like 400 to a high of 850. 850 means you have perfect, anything with an 8 in it and you are, A plus.
Right.
And anything with a 7 in it is an A if I'm going to equate it. And anything with a 6 in it is a B. And anything with a 5 in it, you're like C, C minus. And anything less than 5, you got an F.
Right.
And so if that's how you want to look at it. Now, so other people that are going to loan you money or rent to you as a landlord, they look at these reports. So a landlord who reports that you stiffed them on the rent to a collection company, the collection company will report it to the credit agencies.
That's what I was understanding, because you as the landlord, if I'm late on my rent, you don't call up Equifax or...
Correct. So a landlord won't report every month, hey, this guy paid his rent on time. But if you stiff them or you owe them money at the end of your lease, or they evict you, or you just bolted and owe them money, they give it to a collection company. The collection company reports it on the credit score or with the credit agencies, because they're trying to collect the money. and it is what's called public debt. And so now it's public information. Whether you go to court, whether you get sued. So if Paul, if I sued you in small claims court for $500,
you wouldn't do that.
I wouldn't. But if I did, let's say you fixed my fence,
right?
And let's say I didn't pay you, and you sued me for $500 for fixing my fence, and we went to court, and then you won. It would be a public judgment, and you could then, it would show up on public record that I owed you $500.
And sometimes those are hard to get rid of. I had one from years and years ago, some pestery thing. I don't know what it was. It wasn't a small claims court, but it was something like that. There was some little judgment or something, and it was an incorrect judgment, and I fought it, and I got it reversed and everything. But it didn't come off the credit report. I had to go get it off the credit report.
I had one on my credit report for years from T-Mobile for $18. I never had a phone with T-Mobile in my life. It was just a mistake. So I want to talk about the credit score itself, right? So why do you need to have good credit?
Yeah, who cares?
Why do you need a good score? Why does it matter? Because if you go to buy a car or lease a car or get credit and your credit is good, they will give you more credit. They will give you a better interest rate, and they will actually make you the loan or give you the credit in the first place. If you have bad credit and you go apply for a credit card from whoever, Chevron, they'll just run your credit. They run the report. They look at it. There's a person that looks at the report and says this person is not worth us giving credit to, and they decline you.
I'm gonna be the victim here. I'm gonna share my own personal story here. So many years ago, I thought it was going to be a big shot.
This was like 2 years ago.
Yeah, I was going to lease a Lexus. And I'd owned a car for a long time. I thought, I'm going to live it up. I'm going to get a car I like. And I had looked at my credit, thought about it, everything, and there were a bunch of little things on there that I had failed to fix or forgot about. Little $18 ones, $50 ones, some other one closed account, didn't pay it off. I got mad at him, said, screw you, I'm not going to pay the $50. There were 2 or 3 of those on there. So I thought I had good credit. I go through the whole process. I pick the car out, and I go in to sign the deal, and they give me a price, and all of a sudden the guy comes back and says, $100 more a month.
Yeah.
I said, what?
Because you have
boom, these little dings in there. Nothing big, nothing major. I wasn't bankrupt. I didn't have.
And then what do you say? That's not me, right? Though I didn't do that.
Yeah.
And then what does the guy say? Sorry. Right. And then so that's what winds up happening.
I signed a lease for a 4-year lease, and I ended up paying $100 more a month because I hadn't paid attention to what was on my credit score.
Yeah. And then I guess I would just tell for people out there, if you pay your bill late, right, there is always a grace period. So whether it's your home loan, whether it's your car or lease payment, whether it's your credit card, you have 30 days to, every 30 days you wind up making a payment. And then usually there's a grace period, whether it's 5 days, 10 days, sometimes it's another 30 days. But if you're late, then they report it to the credit agencies that it's late. It shows up as a late. So,
ding.
Right. On the report that other people see, you see the late. And so if you pay late every month or you're a month behind, every month you're going to show a late. So what does that do? Number one, it shows other people that you're not responsible. It shows people you can't manage your finances and you can't pay your bills. As a landlord, I look at I don't look at the score so much, but I look at what is the pattern of history. If you stiffed another landlord, I would just tell you, you have a tough goings in today's market, especially after COVID, of somebody who will not want to do business with you because you stiffed your landlord and didn't make it right. And so that's a big one for us.
But people do that all the time. You come in here and talk about it all the time. People just walk away from the lease.
But those people, look, it will come back to bite you. I mean, I don't know how else to explain it to you. For people who are out there who care, right? There's one thing to say, oh, I have perfect credit. What does that mean? What that means is if I do go to borrow something, it will be at a cheaper rate. You would get a credit card at 20% instead of at 30%.
I learned my lesson. I've never done that, and I think I've got my credits in the mid-7s or something here. Whatever that means.
So then the question is, well, what do I do, and how do I get good credit? And I would tell you from a business perspective, banks will lend to you. Credit card companies will give you a business credit card. If you want to lease a copier, they run the business credit. If you're a small business, they might run your personal credit, in which case they're looking for you to guarantee that payment.
Let's talk about that for a second, because the woman from Experian who is their public outreach. I don't know what they call her, but her job is to go out and try and give classes like you do, or to give talks, usually through other things like the chambers or the SBDC. That's who she was here with, and trying to explain people not just how credit works, but how do you make better credit. One of the things that I always was taught that turned out to be 100% wrong is, this is my World War II generation father, pay your debt, pay it off. Don't carry anything. When you get it, something, pay it off. And yet the fact that I paid it off all the time maybe looked good because I was good, but I wasn't using.
You weren't right. You weren't
I wasn't using
building the credit, and so then somebody would look at you, who, if you went to apply for a loan, they'd say, "Look, you don't really need a loan from me because you don't have any debt,
right?
And you're paying everybody else off, and so you're just going to pay me off, and so I don't make any money." Now, keep in mind,
I don't make any money. I really don't want to.
Well, yes and no. I mean, it depends. Right? So if you go get a credit card, and the interest rate is 25%. They want to make some money off of you.
Of course.
Right? And so it's almost in your best interest if you ran up, let's just say, a couple $100 in a month. It's worth it for you for the first few months to pay it off all when it's due. And pay it before the deadline so that you establish a pattern of good payment history.
Right.
And then it might be worth it for a couple of months to just give them a little bit of interest and maybe pay $100 instead of $200, and then the next month pay it off so that they get some interest from you. They got some money, and then they say, oh, this guy is using it responsibly.
Right.
They will increase your credit line, right? Because if you don't ever hit the maximum, there's no reason to increase the line because they can see your spending habits.
Right.
So if my goal is that I start out with $500 and I want to get to $1,000 or $2,000, I mean, there are credit companies out there that would give people that don't deserve it a $5,000 credit limit, and they didn't even justify that they needed it or could support it. But they'll do it. There are companies out there that'll do it, and then that's where people get into trouble. And so you run up this debt, and then if you only pay the minimum, people can see your spending habits there. They can see that you have a $5,000 balance on your credit card.
It never seems to go away.
And you're only paying $25 or $50. As a landlord, I can see that on the report.
Right.
And then I go, well, wait a minute. If this guy ever gets in trouble, or he gets sick, or he gets laid off from work, how's he going to pay the rent? Right? I mean, there's no fallback, because if I had available credit and there was a problem, I could lean on my credit card to get me out or buy me some time.
So let's talk about that. It's another. I still don't know if I understand this correctly here. After all these years and all these discussions about it here, is it good to have a huge, to have 10 credit cards, 15 credit cards, and have big credit limits on all these things, even if you don't ever use them, because somehow that, and in some sense it seems like, then when I do borrow something, it's a smaller percentage of my available credit.
Right, but you so let's break it down. If we were talking about a class, this applies to young people. This applies to older people who have never done it, or are trying to build credit, or just go with a new plan.
Right.
So I'll give an example. My son, he was 18, and I decided I wanted him to get a credit card so he could learn how to use it responsibly. And there are.
How did that work?
Well, so I went to the Chevron station, and they had a thing when I went inside the booth that said apply here for a credit card. And I thought, this will be a good thing. He gets gas, right, for his car, and so he got denied, right? And so why did he get denied? Well, first of all, he didn't have a job at 18. He had no income. And then, second of all, I found out later that so he got a job, right, when he got a part-time job, and then he had income and applied again, got denied again. Then I found out they don't give credit cards to people that are under 21 years of age. Now, that's that company, so you need to know that. Finally, I got a different gas card company, and they do it for people under 21, and he got it, and they gave him a $200 credit limit. And so you're not going to spend $200 on a tank of gas. And so if you got 2 tanks of gas and it costs you 60, 70, 80 bucks, then you would use that, and then at the end of the month you would pay it off, right? And then I said, okay, you should try and get like a credit card from like Capital One or whatever. And so he applied. He had the one from this other gas company, and then they denied him. And then why did they deny him? He said he didn't have enough credit, right? So that's a typical answer where you don't have enough credit. Well, how do I get the credit? So, and if you apply to 3 or 4 places at the same time, they can see that.
That looks bad. Yeah.
So
right.
then it looks like you're flying all over town and you're desperate for credit, so you
Right.
can't do that either. You have to get one card.
Same thing if you were shopping for cars, supposedly. You know, if I go shop at 5 cars and they run my credit 5 times, that
Yes,
looks
or
bad.
5 landlords, right? Don't do
Right.
it. So it's important for you to know what your credit looks like before you start the process. And then you're going to want
How
to
do you
build
do
on top
that?
of
How
it.
do-
Well,
I
so
don't-
you look, there's Credit Karma is a website. You also, for people out there, you are entitled to one free credit report from each of the 3 credit reporting agencies, Experian, Equifax, TransUnion. You can write to them, which is the only way you can do it. It's old school.
Yeah.
You write to them and request a free copy of your report. They will send it to you within a week or 2, and then you can see what it looks like from them. Right? Because again, even if you go on Credit Karma, it's pulling information, but it might not be direct from the source.
And I think Experian, that's what she was pitching when she was here. They have something sort of like Credit Karma.
Experian has their own Equifax. It's a monthly subscription, so they want you to
Right.
spend money so that you can monitor it, which is not a bad idea. But if you're trying to build the credit, right, you need to see what's on there, and then you need to systematically add to it. So one of the first things that somebody taught me, and I forget who it was that told me or whether I read it somewhere, is I went and got a car loan when I was 22, 23 years old, and I had a job and I wasn't making a lot of money, but I got a car loan, and then they said, look, you should, we're only going to make you a car loan for like 24 months. That was the deal. And then they said what you should do is you should, when you get down close to the end, pay off the car loan early if you can. Because the bank will love it, because then you're a responsible buyer. And then when you go to get another car, they'll look and you can tell them, yeah, I actually paid the car off early and I paid all my payments on time. They want somebody who's responsible.
But don't pay it off in the first month.
No. Well, one, you can't. If you could, you don't need the loan, right?
Right.
So, but you could pay it off in month 23 of month 24 and just pay 2 payments at the end. That would show good faith. So I did that. And then, I went to a bank, and you can go to Wells Fargo, you can go to B of A, and you go on the branch, and they will give you a Visa card or a debit card against your own savings account or
Right.
your own checking account. So there's no risk. You have money in the bank with them. They give you a card, you charge stuff on the card, and then you pay it off with your own money. And now you're building credit, and the world can see you as somebody who is responsible, right? You do not go to Roberto's Jewelers and buy some jewelry for your girlfriend and then spend $500 on something and then pay the $20 a month. That is not a good sign of somebody who is using credit responsibly.
Right.
So what does that mean? And like, why do I even care, right? And so when I go to sign an apartment lease,
That's the question everybody asks me. Why do I care?
You should care.
I cared when I suddenly wanted to get a car. I hadn't leased a car in years, and suddenly I got stuck with a higher bill because I hadn't paid attention to all this little Mickey Mouse stuff.
Or they'll decline you.
Or they
right?
decline you, right?
And so, look, if you're older and you're retired, you have no income. Why would I give you credit? You have no justification that you can pay this back.
But I'm also thinking, at some point in your life as you get older, I'm not going to buy anything. I'm probably not going to buy another house ever again. Maybe I'm going to ride this car for the next 10 years or something. I'm going to consume less. Therefore, I'm not seeing any need for great credit. And yet something comes up. All of a sudden you need credit, and oops, there you are.
And I got to tell you, you go to get a friends and family at AT&T for your cell phone. They run your credit. Yeah. Right. And so, and if you stiff AT&T on your bill, it goes on your credit report. So when you go to T-Mobile,
those are the little ones that I got stuck with.
But these are patterns of behavior that someone would look at. So do you think that if you stiffed AT&T and you go to T-Mobile, they're going to actually want to do business with you and be excited? The answer would be no. No different than if you stiffed XYZ property management company down the street and then you come to me and want to rent an apartment, I'd be like, I'm not going to do business with you.
I stiffed American Express, I'm sorry to say, 100 years ago over something I got mad at. They challenged something, they didn't do it, and so I said, screw it. I'm not going to pay the last $100 or something here. I'm telling you, to this day, I can't get an American Express.
Yeah, well, so
ever again.
So then, look, I would just say, if you don't care, I guess it didn't really bother you, and you cheated them out of $100. But I would also tell you that it's not just American Express, because the rest of the world
they were
can
supposed
see
to
that.
refund it back to me, though. There was a problem. Right?
So let's talk about what happens if you stiff somebody and it goes on your credit and it's bad. It stays on your credit report for 7 years. That's the deal. So if you make your car payment late and then you pay off that car in 2 or 3 years, it's still on your credit. Not a smart move. So it's important to know if there's bad stuff on your credit to try and clean it up. We'll get to that in a second, but it's also important to try and build credit. So part of the issue is if I got a credit card and I paid it off from credit card company A, then when I apply to credit card company B, they would see that I was being responsible with credit card company A, and they would want to do business with me, and they would give me credit. Now, what is...
Because they always give you credit when you don't need it. So in other words, if I'm doing
Not
well...
if you have bad credit, though. I mean...
No, I know, but I'm just saying if that's the irony, too. Once I get one credit card and I'm paying on time, suddenly 20 others want to...
So look, then there's the school of thought, which is I walked in college campus, and they have all these introductory offers.
I
And
got 12 credit cards.
I got 12 credit cards, all with $500, and then I could spend $6,000.
Right.
You don't want to get 12 credit cards because then eventually somebody wakes up and goes, this guy has too many credit cards. And if you're using them all, you are a high risk. If you don't use them all, then you've got all this credit for no reason. Why do I need to give you more credit? You've got plenty. You should just go use those.
And then they eventually drop if you don't use the credit card.
Because they want to make money off
all of a sudden, my Macy's card didn't work. I hadn't used it in 5 years.
Yeah. Correct. Macy's is a good one of that, right? And then and you go to Macy's and they con you into...
you get 10% off.
You get 10% off, right? And so you do it, and then you don't use it again, and then it's stuck on your credit, and it doesn't do anything. So all I'm saying is if you're going to get credit cards or you're going to build your credit, then there's a process to it, and you have to keep track of it. You can't just not.
So for our listeners today, many of whom are business people, this is the other thing that surprised me about the Experian person. She said, I'm a small business. I have this radio station here. I sign everything in personal credit. My car, my lease here, all this stuff. I just put it on my personal credit card or my personal account. I sign for things personally when I sign leases and stuff. And they said, you could and probably should have business credit. You've been doing this for 20 years. You've paid the rent. You've paid other vendors and stuff here. And I said, what's the point? And they said, well, the point is maybe, you could shield yourself down the road, or maybe something happened to your personal credit. You still got business credit that's no longer linked together. What do you think about it? You're dealing in a world of high-end commercial transactions. Is everything just a personal guarantee, or at some point do your companies have credit?
So if you build credit for the company, no different than you would build credit for yourself. So the difference is on the company side, there's a company called Dun & Bradstreet, right? DNB. They run credit on companies the same way Experian and Equifax would run credit on individuals. And they have their own credit score. And so if I, as a business owner, have a lease on a copier, when I pay the copier company, they report to Dun & Bradstreet, not to Experian or Equifax, and it shows up whether I have good credit. If someone sued my business and they won and they got a judgment, it would get reported to Dun & Bradstreet. So the same concept applies to the business owner. When you go to rent commercial space from somebody, they will run credit on the business. Then if you're a small business, they might run credit on you. So it's just as important to have good credit for your business as it is personally. And then one would say, well, what if I had bad credit personally, but I had good credit on the business?
Right.
Somebody would say, well, you're still high risk, right? And then somebody would say, well, if the business doesn't have any credit, or I haven't done a good job of establishing credit for the business, they're going to say, I want you to sign personally because the business doesn't have any credit behind it. Which is why when you go to apply for a bank loan for your business, whether it's an operating loan or a small business loan, or a copier loan or a computer loan or a phone system, any of these things that you can lease or buy with payments, they run a report on you, and they run a report on your company. So I would just say for the small business owner out there, it is equally important to build credit for your business as it is to build it
and
for
I'll give
yourself.
you two other examples of that I learned the hard way. So opened up this studio 3 years ago here at UCI. I had previously had it in just an office tower over near South Coast Plaza. And this UCI wanted a Dun & Bradstreet report.
Yeah, and so
because they're dealing with a different. I didn't have a Dun & Bradstreet report. I had to go create this thing and do it, and it was just that could have been a barrier to me leasing here at a different thing. Or you want to go get a job someday. I'm not looking for a job, but people tell me.
Oh, people run a background check these days, right? So people say, why do I need good credit? Look, it may not be the determining factor between you getting a job and not, but if your boss knew that you could not manage your finances and pay your bills, it would kind of be an important thing because
Yeah.
it's a character trait. And then it would also show if you said, hey, I'm making $100,000 a year in my current job, and then I run your credit, and then you owe all these people money, or you've stiffed other people. I think you don't know how to manage your money, or you're lying that you're really not making $100,000.
Or you're going to cheat me or something. You're going to rob from me or something. Yeah.
Right. Or, hey, you're going to be coming and hit me up for a raise because
Right.
you need money because you're broke because you owe all these people money. So there's a whole variety of things, but it is a process. And if you really take it seriously, it will come back to you later on. And for younger folks out there, it is the utmost important thing, especially for folks. It's interesting because we have people that come to rent apartments and, they're in their 20s. And then we say, look, you really just got out of college, or
Right.
you're just starting out in your career. We need your parents to guarantee it. And then I hear all the time, my parents aren't helping me. They don't have any money. They want me to stand on my own. And I go, okay, but you haven't done a good job of trying to stand on your own, and you're not giving me a good comfort level. And if your own parents aren't willing to support you and guarantee the lease, and they're not willing to bet on you, why would I bet on you?
Yeah.
Right? I mean, you're
Yeah.
not helping me. And so it gets back to the whole story. And so
So is it that? It's a story. It's a story it
Oh, yeah,
tells
it's a
of
story.
you, whether I'm going to hire you, whether I'm going to rent to you, whether I'm going to lease to you, whether I'm going to give you a loan, all these things. It's part of the story that they're judging you for your character,
Yes.
for who
So-
you are.
And I would tell you, look, if you have medical bills and you stiffed your dentist or you stiffed your doctor, they give those bills to a collection company.
Yeah.
They report it on your credit, and then it stays there as well. You ever get a doctor bill and you never even knew you had it because you thought your insurance company
Yes,
paid it?
I
and
had
then-
one of those, right.
Sure, and that happens all the time, and those are honest mistakes. But
Right.
the insurance company never paid it, nobody told you, and now you got a $100 doctor bill on your credit,
I
and it's
had a
messing
couple
up
of
your
those, right,
credit.
right.
And then you got to call and haggle with them to try and settle the thing to get it off your credit. But even once it's on your credit, it doesn't go away.
No,
right?
sometimes you
people
gotta
need to
chase them
understand is-
down, yeah.
But even if you pay it off, like the $18 bill that I had to argue with T-Mobile about, and then I just said, look, this is not worth my time. I'm just going to pay the $18 even though it's wrong. I paid
Or what
it.
I did and say, screw you, and I'm going to pay it at all.
And I would tell you that's bad strategy, right?
Right.
I paid the $18 and it stayed on my credit for years, right? So other people could see it said bad debt, and then it said settled by consumer. So it showed that I settled it so people could look at it and go, look, he did take care of his debts, right? The guy is an honest guy, but it still shows up as bad credit, right?
Yeah.
And so, look, the worst you could do is you get a car repossessed, or you stiff somebody, or even on the student loans. If you have student loans, they will show up on your credit. And,
Yeah.
and if you didn't pay your student loans and they're defaulted, they're going to show up. You can't rely on the president or Bernie Sanders to make your student loan go
Bernie
away.
Sanders. Here's another question. Maybe this is too obscure, but we live in Orange County, lots of ethnic communities here, Vietnamese, Persians, Hispanics. And in those communities, sometimes it's hard to get credit because of whatever, but a lot of them, they don't believe in credit.
Right, well,
Everything's cash.
Right, and you can pick a culture, but I mean there are certain cultures that just from the old country or from wherever your parents or grandparents were from, you dealt in cash or commodities, right?
Right.
And in old times you dealt in gold or diamonds or
Yes.
jewels, and that's what you traded with. But again, you are here in this society, and this society revolves around credit. And so when you show up to, again, rent a car, buy a car, rent an apartment.
show up as a
What
ghost.
if you want to buy a house, right?
Yeah.
Someday you might want to aspire to buy a house. When you go to get a loan, if you have no credit, they're not going to approve you.
Right.
You have to figure it out, and you have to get a plan. It doesn't mean it's going to cost you money. And it doesn't mean that you have to use the credit cards outside.
But they don't want the government to know. Maybe.
Well, look, that's a different story. If you're trying to be under the radar screen, then you should have no credit, and then you just don't apply for anything. But
Yeah.
for somebody who, at the end of the day, wants to go get a loan, right? When you go to apply for a home loan, they give you a rate based on your credit score,
Right.
or they decline you. They also will loan you more money if you have better credit than if you don't.
Do you charge people more for apartment rent if they have bad
Well, you
credit?
no, you don't do that, but you would charge a bigger deposit, right? And or you would just decline them, right? So sometimes landlords would charge a double deposit versus a single deposit. Did that cost you? Sure, it did. I mean, if your rent's $2,000 a month, that just cost you $2,000 because you had crappy credit.
And particularly you stay there for years, that you're not getting any interest back when they give you that money back or whatever. You just gave them
Sure, and
part
so
of that money back.
and we have tenants that we charged a double deposit on, and they've been with us for years, and you would think they would try and clean up their credit, and then when their lease came up for renewal, they would say, look, I've done a good job, I've cleaned up my credit, can I go back to a 1-month deposit? Can I get, and I've paid you on time, right? I've established myself. People forget, and then they just leave the deposit there, which is crazy. It's just lost opportunity. So, I mean, this is a class that should, in my opinion, get taught in 8th or 9th grade.
And it's a whole question why none of us get taught any of this ever, anywhere, until the School of Hard Knocks knocks on your door and says, oops.
And I've talked to smart people that are grown adults that have no clue what they're talking about with respect to this.
I hear doctors and lawyers and everybody have terrible credit. And
so I would just tell you that, I mean, it should be a GE requirement at every school in the country if I was in charge. But the fact of the matter is that you need to be able to build your credit as time goes on. It doesn't happen in a day. You can wreck it in a day very easily by just not paying your bills. And then you need to monitor it. And you need to check it once in a while so you can see what's on there, because sometimes there's stuff you just don't know.
Serial entrepreneurs. We're in a building full of serial entrepreneurs. A bunch of them fail. They suddenly can't pay the rents. They can't pay the employees. They can't pay the copiers they rented and all this stuff. And they just start all over again, and somehow they magically resurrect themselves. And I think, doesn't that bad credit haunt them? Or have they just figured out a way to tell a better story?
Right. Look, it all depends. I'm not going to tell you 100% of the time if you have bad credit, no one will do business with you. But I can tell you that there are many ways that it's going to cost you money over time at the end of the day. And so you got, look, here's a couple of tricks of the trade. Go and get one credit card. Use it responsibly. Just charge 1 or 2 things and pay it off. And then a couple months later, don't pay the whole amount off. Pay some interest, and then pay the whole thing off and get and don't let it run away from you. And then you go get another card and you do the same thing. And don't get 10. But if you had 3 or 4 cards, it would show that that multiple people trusted you enough to be able to give you credit, right? And so when you go to get bigger things, whether it's a car or a home or other things, then people will look at it and go, this person is somewhat responsible. And so this gets back to, if you're trying, I want to bring it home to reality. If you're going to rent an apartment in a tight market, which is where we're at today, right? Here's some smart tips, right? Write a cover letter, right? Run your credit before you go to apply, right? So I saw an email this morning from someone in the office. They said somebody didn't want to apply because they know they have bad credit. Well, okay. What would you like me to do? Should I just stamp declined on it right now? Should I say thank you? I mean, you've obviously gone to other places where they've run your credit, which is how you know it's bad. And then
they're hoping you're the guy that's going to say, I don't care about your credit.
Right. So either lie to me and then just don't even bring up the credit, or throw it on the table because you know it's going to be an issue, and then explain around it.
Exactly.
So, I mean, if you have $100,000 in medical bills because you had a severe medical issue, and
car accident,
right, or there's no way for you to get that, explain it. If you have 10 different doctor bills from last month and you just didn't pay them, I mean, why? What's the explanation? Is it I just don't pay my bills, and then somebody else would be like, well, then you're not going to pay me?
Because I pay my rent first, but everybody else I stiff, Right.
Okay. Yeah, I mean, so look, for young folks out there, don't go get all those applications. Maybe just get one and start with that.
Don't run it up like crazy.
Right.
Don't think it doesn't matter.
And pay your bill on time, right? It's no different than getting a parking ticket, and if you don't pay it within 30 days, it doubles. Right, usually. And so with your credit card, the worst thing you could do would be to get a credit card and then not pay the bill on time.
I got a jaywalking ticket once up from Beverly Hills. Jaywalking. I crossed the street. Everybody's crossing the street, and I got caught. And I threw it in the trash. I laughed. I said, I'm not going to pay this $20, $50 jaywalking ticket. Yeah, until I got this notice. It was now like a $300 ticket, and there's a warrant from my arrest out and everything because of a stupid jaywalking ticket I didn't pay.
So we digress, but that's
you're seeing a pattern
horrible. And look where that got you, sitting in a radio station.
Exactly.
Right. These are things, folks. Don't watch
ways.
Paul. Right. He's not a good example.
Exactly.
But I would say, just in summary, like it's important to have good credit. You need to build the credit. You're going to need things at some point, someday, right? I mean, even if you said I'm never going to use credit or anything again, like it's just not a difficult thing to be able to have a good credit, or at least your arms around what it is. And I would just say also, somebody with no credit is better than somebody with bad credit, but still not good.
No, it's not good. That was the lesson my father well, the World War II generation have almost no credit, rarely use it, pay it off immediately. And somehow maybe that's a good life lesson. But
I would just tell you things like paying your car payment, let's go in order. Paying your mortgage, number one. Paying your rent, number one, right? You need a roof over your head, and B,
right.
if you can't pay the most important thing to keep a roof over your head, it's just a character issue at the end of the day,
right?
And then you make your car payment, and then you make your credit card payments.
But today it's probably got to pay my cell phone payment because I need that more than I need anything. Right?
Sure, because if I don't pay, they'll cut me off, right? And maybe it'll take a couple months for my landlord or my lender to take my house from me or kick me out, but.
Right.
Not a good strategy. I mean, I can't, and if you can't afford it, don't get it. That would be another thing, right? Don't spend money that you don't have. It is
that's just anti-American. Come on here.
Yeah, but it is not. Look, you're going to see a lot of people get in trouble going forward. The amount of credit card debt has tripled in the last
back up
24
again.
months.
Yeah, it's a scary number.
And it's not so much that the debt has tripled, it's that the interest rate also has gone up dramatically. People don't understand that Macy's card is 29%.
It used to be 12%, 14%. Yes. Now it is almost 30%. Maybe it is 30%.
Well, so think about that. If you racked up $1,000 and then you just paid the minimum for a year, right? That $1,000 became $1,300. Right. And so if you max out the card and you only pay the minimum, the balance will go higher than what you're paying down, which means you've maxed out the card, which means you can't even use it. And now B, it's just costing you money. And at some point it gets
so far away from you. I had a friend of mine that had, $10,000 loan, $20,000 loan. And suddenly through penalties and some late payments and some interest and everything, suddenly that turned rapidly into, in a couple of years, a $50,000 loan.
Well, also look at the monthly payment, right? So I knew somebody, and they put everything on their credit card because they wanted the points.
Yeah,
right? They were trying to get the miles, right? And so what they don't tell you is the miles fluctuate. I mean, if you planned a year in advance and you went to Lincoln, Nebraska, you might be able to use those miles for 20,000 miles for a flight. But if you want to go to Hawaii at Christmas, that's going to cost you 200,000 miles,
exactly.
right? Then you don't have enough. But you don't charge stuff just to get the miles, and so they go, oh well, if I charge stuff, right? I get it, but I'm saying that's not why you charge. Right. And so then you put everything on that credit card, and then what happens is, oh, this month my car broke down, so I only paid the minimum, and then next month
Kevin Hart, that whole commercial he does for
I got sick, and so I didn't pay it, and so now all of a sudden you've racked up $20,000, and you're paying 30% interest on the $20,000,
and it can get away from you.
And now your monthly interest could be $400, $500, $600 a month, and then that's a whole nother payment, and then you don't even realize it. So I would just say, look, drink responsibly, charge responsibly. Credit is important. You really, you have no idea how when it will come back to you at the end of the day. And then other people go, hey, go ahead, wreck my credit. I've had people say to me, oh, you're my landlord, I'm not paying you, screw you. Go ahead, wreck my credit. And then 5 years later, they're trying to get a car or a house, and they call up and go, I owe you X. Would you take, 10 cents on the dollar? And I go, why? They go, well, I can't get a house loan. I go, I'm not taking 10 cents on the dollar. Remember when you said it didn't matter and you stiffed me? Yeah. I guess it matters.
Guess it mattered. Well, it matters more than we think. And like a credit card company, I'm going to cut you off here because this go on and on and on. But it is an important topic, and we should talk about it some more. How do they reach you if they want credit counseling? As you do this on the side here?
Yeah, no, I don't. You can tune in every Tuesday. We probably won't talk about credit ever again. But what I would tell you is it is a story of your personal or your business experience. And so no different than writing a cover letter about it. It tells about who you are and what you do. So do it properly, take advantage of it, and make it an asset and not a liability for you. And so that is the sum of the day. And then I would just say, look, for people that are out there that have bad credit, there are ways to fix it. You need to go one by one on your credit report. Go get a copy of your credit report. It's free, right? Experian.com, Equifax.com, TransUnion.com. You can go online and get information. And then creditkarma.com is free. You can get it get the app on your phone. You can check your credit, just like that Experian Boost, right? You can get it on an app on your phone. You can check it all the time. And so if there is bad credit that happens,
or bad charges,
or somebody puts something on your credit that's not supposed to be there, you'll know about it. You can try and do something about it. Don't just leave it there. So with all of that said, I am Barry Saywitz, president of the Saywitz Company. Today's credit lesson is on the house.
This one's free. Next one.
Don't be Paul.
I give you lots of
Don't jaywalk. Pay your bills. Tune in next week, and we will talk some more real estate. Thanks for tuning in. I'm Barry Saywitz, and we'll see you back next week.
Well, there you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California, Irvine's Beale Applied Innovation.